You'd think things would be quieting down for the holidays, right? Well, not in fintech. While some parts of the market are hitting the brakes, the world of fintech is absolutely buzzing with huge strategic moves. We're talking billion-dollar bets that are going to shape the next decade of finance.
And that really just sums up the mood perfectly. There's no end-of-year slowdown here. Nope. Instead, some of the biggest players out there are loading up, getting ready for their next massive play.
So today, we're going to look at three of these giants: MercadoLibre, SoFi, and Mastercard. Now, each one is making a completely different kind of bet on the future, and we are going to unpack the strategy behind every single one. First up, let's talk about the titan of Latin America, MercadoLibre, or as you probably know it, MELI. Their move isn't some flashy, risky gamble. Oh no, this is about building a fortress, an unbreachable one, for the long, long haul. So get this, MELI just raised $750 million. But honestly, the big number isn't even the most interesting part. It's the interest rate they got, just 6.25%. Now for Latin America, where money is historically way more expensive to borrow, locking in a rate like that is a massive win. It's like they're filling up their growth engine with premium fuel that they bought at a huge discount.
So how are they going to use all this cash? Well, it's all about making their competitive moat deeper and wider. They're going to make their payment system, Mercado Pago, even more of an everyday essential. They're expanding their lending arm, Mercado Crédito, so they can approve and fund more loans themselves. And they're pouring money into a logistics network that's already a beast. The goal here is pretty simple: become so essential to the region that no one can touch them.
And this just brilliantly captures their whole vibe, doesn't it? It's that relentless pace. Just when you think they can't possibly get any stronger, boom, they find another way to level up. It's honestly impressive, and if you're the competition, it's got to be a little terrifying. So the bottom line is this: MELI sees this huge long-term opportunity in Latin America's digital economy, and they're using really smart, cheap financing to make absolutely sure they're the ones who capture it all. Okay, now for our second player, SoFi. And here, the whole tone just shifts. We're going from strategic fortification to, well, pure high-stakes mystery. They are raising an absolute mountain of cash, and everyone is asking, why?
And we are not talking about small numbers here. SoFi has raised a staggering $3 billion. And this wasn't just one move. This was two separate offerings in a very short amount of time. You just don't raise that much cash that quickly by accident. This signals some serious ambition. I love this analogy. It just perfectly captures the feeling in the market right now. SoFi is telling everyone they're just, stocking up. But the sheer scale of this preparation, it just screams that they're about to enter some kind of major event. So we're all left playing detective, right? SoFi has gathered all the puzzle pieces, but they haven't shown us the picture on the box. And you can bet it has investors and analysts buzzing, trying to figure out what the heck the end game is.
And the theories are all over the place. Are they about to go out and buy another big company? Are they getting ready for new banking regulations? Or maybe, just maybe, they're about to pour jet fuel on their tech platforms, Galileo and Technisys, to create a new backbone for the entire industry. We don't know the answer, but any one of those would be a total game changer.
So the key thing to remember with SoFi is this. This is not a rainy day fund. This is a war chest. Their CEO, Anthony Noto, is known for playing offense, and this is the clearest signal you can get that a major offensive move is right around the corner.
All right, on to our third and final story. And for this one, we're going to pivot from capital to data. See, Mastercard's big bet isn't about raising money at all. It's about using the incredible intelligence they already have. They're trying to move from just processing payments to actually shaping financial decisions. They just launched a product called Credit Intelligence 1.0, okay? Think of it like an AI co-pilot for banks and lenders. It uses Mastercard's just mind-boggling amount of transaction data to give lenders a real-time radar. It helps them spot when a borrower might be in financial trouble way before it becomes a crisis.
Now, what's really fascinating here is the strategic shift this whole thing represents. Mastercard doesn't want to just be the rails that money travels on anymore. They want to be the brain, the intelligence that helps lenders make smarter, faster decisions about all that money.
And this is the perfect way to understand the difference. For decades, right, a FICO score has basically been the big, one-time final exam for your credit. You pass or you fail. But Mastercard's AI is completely different. It's like having the professor's own study guide, a constant stream of insights and answers that helps lenders understand risk as it happens, in real time.
So the big takeaway here is about more than just one new product. It's a sign that the very DNA of payment companies is changing. The real value is shifting from the plastic card in your wallet to the ridiculously powerful data engine that's running in the background.
Okay, so let's bring it all back together. We've just seen three very different, very powerful moves from three of the biggest players in the game.
So just to recap, you've got MercadoLibre using cheap debt to build an untouchable fortress. You have SoFi stockpiling a massive war chest, signaling some huge, aggressive plans. And then you have Mastercard betting its future on becoming the intelligence backbone for the entire lending world.
Fortification, ambition, or intelligence. At the end of the day, each company is placing a massive bet on their answer to that one fundamental question. They're all playing the same game, just with very, very different strategies.
And that really leaves us with the big question to think about, doesn't it? In the future of finance, what's going to be the most powerful asset? Is it the solid foundation you build with cheap capital? Is it the bold, disruptive move you make with a giant pile of cash? Or is it the quiet, undeniable power of simply having the best intelligence? Only time will tell.